Good morning, everyone. This is Stuart. Hope you had a great weekend. A brief update to start the week. We'll cover the latest on trade, the stock market, potential constraints acting on the Trump administration, and the earnings outlook. To start, last week media reported that the Trump administration was close to finalizing a roadmap to streamline tariff talks. Now, this doesn't mean that they're close to actually negotiating concrete trade deals, the likes of which could take multiple years. We rather think this means that they're likely to announce a blueprint for trade deals that other countries can sign up to, India and Japan being the first potential trade partners that agree to this. The market responded positively to these rumors. The S&P and NASDAQ were each up over 7% last week, one of the strongest performance weeks in years. We are still down several percent from prior to the April 2nd Liberation Day announcement. What might be happening here? Well, we think outside constraints might be forcing the Trump administration to walk back some of their hardline stances. The president's approval rating is down from the mid-50s to start his term to now the mid-40s. The market is obviously a constraint. I doubt the president wants to reside over a deep bear market or even recession. Economic data might be a constraint if we start seeing weakness in economic data. Congress could seek to reassert its constitutional prerogative when it comes to trade, and the 2026 midterms are something to look out for. If the Trump administration wants to retain their control of the House and Senate, they can't be this unpopular going into the next election cycle. What matters more than all the trade chaos is company earnings. It was a quiet period the last few weeks prior to Q1 earnings reports, but now that we have companies actually reporting, we're hopeful that fundamentals reassert themselves in driving markets rather than trade rumors. This week, we have earnings updates from Microsoft, Meta, and Amazon and Apple, as well as many other companies. Google or Alphabet reported last week and recommitted to their capital expenditure guidance, which was constructive for many of the firms in the artificial intelligence complex. To date, earnings revisions have been slightly negative, meaning that companies are lowering their guidance, and there is lots of uncertainty as to how the economic outlook will unfold and whether trade and tariffs will pressure companies over the coming quarters. Lots of moving pieces at the moment. Please feel free to reach out to us to discuss anything with respect to your portfolio or markets generally. Again, we think that volatility, even though it's quite uncomfortable, could be an opportunity to reallocate within your portfolios and increase the quality of your holdings. Short term, there is lots of uncertainty and markets will trade on the latest trade rumors. Hopefully earnings take the ball in what's driving everything. Longer term, we do think there are structural trends that are still intact, whether that's artificial intelligence, energy demand, progress in biotechnology, to name a few. So again, please feel free to reach out. Thank you very much and hope you have a great start to your week.